Over the last week, the stock market basically went nowhere with the S&P closing at the exact same level where it opened the week. S&P was down on Friday 0.33%, closing at 6259.75. So we've been trading in this zone between 6280 and the 6200 level over the last week to week and a half, basically forming a consolidation zone here at all-time highs. Now, at the time of this recording on Sunday evening, the Dow futures are down 200 points after Trump slapped 30% tariff on Mexico and the EU. And so there is still the headline risk that we've been talking about over the last several weeks here in this market, even though the market continues to climb this wall of worry. We continue to see positioning in SPX options at higher strikes. We see the big 6,300 strike, that is the largest gamma exposure concentration. But look at all these other strikes even higher. The 6,500 strike is the second largest gamma exposure concentration. And of course, that doesn't mean that we're going to go straight up to these levels, but what it shows us is that market participants are positioning themselves for higher prices later in 2025. So while this could be some distribution forming here in the market that results in a pullback, the gamma exposure picture is showing us that any pullback is likely to be short-lived, ultimately being scooped up by traders and investors and potentially reaching even higher prices later in the year. Turning here to our gamma exposure data graph, one of the things we've been discussing with our members in our daily live stream is the implied volatility on the S&P, in particular using the VIX, still down here at super low levels below 17. Implied volatility has only been lower 27% of the time in the last year. So we're at extremely low volatility levels while the market is at all-time highs. And we've been taking advantage of this low volatility environment with tactical trade setups. We actually have two relatively new channels in our Discord server, 0DTE intraday setups as well as weekly setups targeting 1 to 5 day moves. And you can see in the last few days, we've locked in profits on Amazon. We actually sold the 225, 222.5 put credit spreads on Thursday, closing those out on Friday for $464 in profit. We traded Hood as well Thursday and Friday, entering on Thursday, closing out, locking in $460 on a 98-100 call debit spread. We've been playing some other momentum names, for example, like AMD. AMD actually blew through our 140 target, trading all the way up to the 143 level. And that was over $500 in profits in just a couple of days. So we've been able to take tactical trades, especially this week as we're hovering around all-time highs. There's a lot of stocks that are still making new highs or making new run-ups into these new highs in the market in general. So if you've been watching our videos here on YouTube for a while, you know that we practice pretty strict risk management with our options portfolio. We typically maintain market-based hedges, beta weighting our option positions with the overall market, trying to find the best place to hedge our positions. And essentially what we've been doing is as the market continues trading higher, we are rolling up our hedges. And so that if there is a pullback, we are able to at least capture some of that move and offset losses that we may have in our long bias positions. And so these hedges and diversifiers that we use in our portfolio are a crucial part of our strategy, but that does leave room for tactical trades, 0DTE trades as well. And so we add those on top of our portfolio strategy in order to take advantage of the market momentum. And if you guys are interested in tracking our trades in real time, you can become a member at geeksoffinance.com. I'll put a link in the description below for you guys to check that out. Next, let's take a look at the Qs. The Qs down 0.23% on Friday, closing at 554.20. Same picture with the Qs, consolidation zone over the last week to week and a half. And so hanging right up in there at all-time highs. We're seeing large gamma exposure concentrated between 560 and 570 on the Qs. So I think even if we open up a little bit lower on Monday or see a slight sell-off into next week, in the early part of next week, currently market participants are positioned to buy that up into the July OPEX. So that's something we want to watch for. Is there going to be a change in market participant positioning next week? We'll be watching that in real time to see if more volume and open interest come in at lower strikes on the Qs next week. Next, let's take a look at a few names that we are actively trading. We'll start with Tesla, up 1.17%, closing at 313.51 on Friday. Tesla making an effort to bounce off of this 290 low, now coming all the way back up above 300. I'd like to see Tesla move above the 320 level. You can see just on our near-term chart, this has basically been a prior support zone just below 320, which then turned to resistance on multiple headline news sell-offs. We're coming back up to that 320 level. I see game exposure concentrated at the 350 strike. In my mind, that does increase the probabilities of a move higher, but again, we need to take it step by step. That 320 level needs to get breached first, and then we could see a continuation over the coming weeks up to that 350 strike. Next, let's take a look at Amazon, up 1.24% on Friday, closing at 225.02. We've seen the game exposure shift higher this past week as the big 225 strike was breached. You can see all this volume that came in here on Friday, and we actually traded right through that target during Friday's session, closing right at that level. So now we're seeing the 230 strike becoming the more prominent strike, and game exposure all the way up to 240 is starting to grow. And this is a name that we've been actively trading. I mentioned this earlier in the video. On Thursday, July 10th, Amazon was trading at 222.57. We decided to place tight stops and enter a long position for a quick move up into Friday, potentially tagging that 225 level. All this game exposure was sitting here at 225, and so this pullback that we saw basically on Wednesday and Thursday gave us an opportunity to enter at slightly lower prices. So flipping back here to the daily chart, Amazon blew through that level, and now we're seeing, as I mentioned, game exposure shift higher. So I think the 230 strike is potentially on deck for this coming Friday. We're going to look for any kind of pullback opportunity. As long as it maintains within this trend, any pullback is going to look like a pretty decent risk reward for a long entry up into that 230 strike. Next, let's take a look at Apple. Apple was down Friday 0.59%, closing at 211.16, and we're hovering right around this crucial resistance level. We've bounced off this 210 to 215 zone several times over the last few months, and this is a big zone going all the way back basically into 2024 as Apple's been oscillating around this level. But the game exposure picture is pointing higher. We're seeing a 215 game exposure concentration followed by 220 and even all the way up to 230. And so I think if we can get above this 215 level, that could be a potentially big breakout for a move up into the 220 to 230 range. That's something we're going to be looking for as well to play maybe on a shorter term time frame for a tactical trade, as well as maybe a relatively longer term trade, perhaps in the August or even September expiration for a play in our portfolio. And for a limited time, we are running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We do have a few spots available, but we'll be ending this promotion soon, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. Members also get access to the premium channels in our community Discord. Our Discord community's got a ton of great traders in there sharing their own trade setups, and you can also track our trades in real time as we manage our options portfolio. I'll put links to all of that in the description below so you guys can check that out when you get a chance. Thanks so much everybody for watching, and we'll see you guys in the next video.